is indeed a great pleasure to welcome you all, both those of you in the auditorium and those watching online. We have an extraordinary group of more than 300 businesses and government leaders here from more than 55 countries around the world. I know many of you have traveled to be with us, and I want to thank you for your time and commitment. Of course, an event of this magnitude, with panelists of those calibraries, and not easy to produce. So, I want to begin by thanking our staff for the tremendous effort in putting the forum together. I also want to thank ICD for suggesting that we hold the forum at this time. And I want to especially thank our distinguished panelists for coming here to share their valuable insights. Ladies and gentlemen, funding businesses is always a challenge. Whether you want to maintain short-term cash flow or expand and grow. Businesses usually look for finance to increase their cash flow to replace equipment or machinery. But the most common is to develop or introduce new or better offerings. The good news is that there are virtual methods and valuable ways to do available to finance businesses. It goes from traditional like loans and overdrafts to flexible like debt finance and trade finance. You're probably familiar with the traditional funding options, but the more innovative type may suit some businesses better and be best used for. Dear guests, we at ICD, as the first and only Islamic multilateral development organization in the world that aims to develop the private sector in the member countries through Sharia, compliant and compatible financing solutions. We believe that there is a tremendous number of options available that will help businesses achieve multiple strategic objectives that are aligned with the world-recognized SDGs. There is no doubt that stepping into Islamic finance, green finance, or ethical finance could help not only businesses, but a whole ecosystem to grow faster and more solid. Ladies and gentlemen, at ICD, before, during, and after coronavirus outbreak, we see ourselves as development catalysts in rapidly changing environment. Hence, need to intensify efforts to normalize relationships between financial institutions, SMEs, corporate institutions, policymakers, and government leaders, with objectives to develop the backbone of all economic, namely the private sector. Ladies and gentlemen, it is obvious for all of you to know the current crises that are also the Russian-Ukrainian war and its effect on food crisis and its effect on energy crisis. We at ICD will be focusing on those two particular sectors during this time period to close some gaps and ease some of the challenges that might be faced. Dear guests, this event is just the beginning of the long journey that ahead of us. We hope it will become an annual gathering, and as the founding group of attendees, we hope you will help to build a community and community of people working on the issue we cover here. We could have asked for a better group to be leading this. We couldn't have asked for a better group to be leading this work, and want to thank you all again for being part of it. With this being said, I'd like to express my sincere desire for successes of this event and wish for fruitful deliberation. At the end, I pray to Allah, the Almighty, to guide us in our efforts to overcome the challenges ahead of us and help achieving the welfare and prosperity of the world. Thank you very much.
Mr. Ayman, and now I would also like to invite His Excellency Dr. Perry Warjo, Governor of the Bank of Indonesia, for his speech. Please step up to the podium.
Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. CEO, ICD, all the panelists, ladies and gentlemen. Let me start by thanking ICD for inviting me to share how Indonesia experience in differentiating to be innovative in the different modes of finance for private sector. But beyond that, I thank ICD for the relentless commitment, very strong commitment to finance of many Indonesian positive and fruitful projects. Next slide, please. We are living in a very challenging world. Global economy is still in balance. Of course, we need a lot of financing, both commercial, but of course, beyond that, Islamic finance. But if you look around the whole in Islamic finance, mostly are traditional, bank financing, at most Sukuk. We need to be innovative. We need to be more go out and creativity in financing a different mode. And this is the experience of Indonesia that I want to share with you. Next slide, please. Look around the global Islamic finance. Of course, we are seeing some increase. But look at the structure of the financing. Most of the structure of the finance of Islamic, either commercial, banks, and there is also musyarakat, mudarabah. We need to do a lot of innovative in the structure of finance. Still, saya comply, but to meet the increasing difference variety. Next slide, please. If we look at different financing in the Islamic finance, we are not looking only on the commercial bank, but we also on the money market, capital market. But now there is an emergence of digital finance, crowdfunding, and how to deal with this digitalized financial services. Not only big project, but also small project, SME, agriculture. This is the different modes that we need to be innovative as well as collaborative, as well as also to be forthcoming on those aspects. Let me just share the 5 Islamic mode of financing innovation in Indonesia. First, I will share about cash wakaf link Sukuk. Second, about Sukuk link akaf. The third, about securities crowdfunding. The fourth, about Islamic public-private partnership. And the last one, the new invention about Islamic revolving fund. Just to show that Islamic finance can be used, a big project, medium project, small project, can be used as infrastructure financing, but as well as for the social financing. Let me start with the first. Next slide, please. This is that we have a collaboration between the Ministry of Finance, the Central Bank, and of course the National Wakaf Board, whereby the Ministry of Finance use as Sukuk, and we create a securities cash link wakaf Sukuk and to do the retail. And we are promoting this for mobilizing the small and retail wakaf. Mobilizing this as cash link wakaf Sukuk. Minister of Finance can do the financing for the infrastructure, but use this as underlying to issue cash link wakaf. And National Wakaf Board can use this to mobilize to the society. The central bank, right, the governor of central bank, we are promoting this to the financial society with the young, the millennial that can participate in this cash-linked wakaf sukuk. Next slide, please. This is what we also experience on the business model of Syariah financing sukuk linked wakaf. This, of course, project can be purely commercial, can be semi-commercial as well as social, but the structure of the financing, both from the sukuk commercial, but also from the wakaf, to be blended financing to use a number of projects. This is what we are collaborating once again with a number of line ministry as well as National Wakaf Institute to creativity and issuing wakaf sukuk linked wakaf. Next slide, please. This is what we are issuing, what we call it securities crowdfunding, using digital finance through the fintech for SME financing. We are working, Central Bank working with Financial Service Authority for digital finance through the fintech, where the securities crowdfunding for the SME can be developed, and then this will be issued by organizer, and once again for the retail investor, both commercial as well as also for social finance. Next slide, please. And you know this because ICD is also participating in the Islamic PPP project, and one of the new projects which is also listed also participation from the ISDV on the infrastructure as well as on some of the downstreaming of our national industry, where the collaboration between public, private financing can be structured to finance a big project infrastructure as well as downstreaming of our industry. Next slide, please. And this is where we are to be also innovative in Islamic revolving fund, where we, from the national budget, we have revolving fund. It used to be this budget is directly financing the SME funding, but now this budget to be allocated to a revolving fund, and this can be generated to issue a number of financing, not only for Islamic cooperative but also Islamic boarding school as well as also some of the social finance. Inclusive. Next slide. Let me 3C, which is creative in mode of the financing in Islamic. Not only confined for commercial bank, not only confined for capital market, but also creativity in a number of financing, be it commercial, social, or blended commercial and financial. Second, this is where in a number of emerging countries, developing countries, where the role of regulatory. The government, central bank, financial service authority need also to come forward there, working with the private to be innovative. Because a number of projects, some of them need fiscal subsidy, or some of the financing or policy which is accommodated from the central bank, but to be also promotion on the Islamic finance for a number of projects. Last but not least, of course, communication is very important. A number of these issues, of course, our society, our private sector, still, of course, do not understand. This is the role of us to be communicating, explaining this, and always promoting some Islamic finance. Last but not least, the 3C. Let's be creative, let's be collaborative, and let's be also communicative. All of those different mode financing for private sector based on the Islamic finance. For big project, medium project, small project. for commercial as well as socially. Once again, thanks ICD for commitment for Indonesia, and Indonesia continue promoting and also expanding the Islamic finance in Indonesia and globally. May Allah always provide guidance and blessing to us. Thank you very much.
And now it's time for our next session titled The Different Modes of Financing for Private Sector Projects. Let's invite Ms. Cornelia Mayer, business consultant, macroeconomist, energy expert, and media commentator to lead this session.
Thank you very much for the kind introduction. Thank the IDB and His Excellency Mr. Ayman Sijini for bringing us together. It's a huge honor to chair this session. May I ask my fellow panelists up? We first have Ms. Eman Babi, then we have Mr. Walid Al-Murshed, we have Mr. Abdul Kader Thomas, and obviously Mr. Iqbal Daredia. And we were supposed to have Mr. Rizwan Kanji, the lawyer, on this group, but he sadly couldn't make it. Ladies and gentlemen, as we have heard this morning, these have been a tough few years. We have had a pandemic. We now have a war in the Ukraine with huge impact on food security globally, and especially also in this region and in Africa. And therefore, there's a lot of financing needed at a time when we've been in quantitative easing for a decade or so, and now we go to quantitative tightening and interest rates are rising. So a lot of project, a lot of needs, where to find the capital. This is why we're looking here at the different modes for financing private sector projects. And obviously this is very Islamic finance focused, and I would like to thank His Excellency the Governor of the Central Bank of Indonesia for the wonderful, wonderful introduction he gave us. So we're talking about Ijara, Musharaka, Murabaha, and obviously also Sukuks. So the resilience of asset-based financing solutions in times of crisis and inflation has become important, as has the ability to use Islamic finance products to finance SMEs. So we will discuss all of this, and as I said, I have a fantastic panel. You couldn't have better experts if you scour the world wide and far. Let me start with Mr. Abdul Kader Thomas, who is the CEO of SHAPE for Economic Consultancy, and he's really one of the foremost thought leaders on Islamic finance. Mr. Thomas, Islamic-based finance is one of the fastest growing asset classes, only probably overshadowed by ESG finance. Can you give us a dimension of just how fast it has grown? And for all the panelists, do have a look at me every now and then when I put these scary glasses on. That means time's up, because we do need to manage time a little bit. You have 3 minutes, sir.
Bismillahirrahmanirrahim. Thank you very much, Cornelia. I'd like to thank very much Your Excellencies and ICD for this opportunity to share with you. We've seen CAGR across markets exceeding 9% for Islamic finance in most countries. And so where is this coming from? It's coming from organic growth. So countries that have had Islamic finance for some time are having more growth, more development across silos. And the Central Bank Governor of Indonesia gave us an example of a country that just 15 years ago had a very limited Islamic finance market, that today has a very dynamic and expanding market. So beyond organic growth, there's the important role displayed by the Islamic Development Bank Group. And this is really reaching out into the member countries that have a core social and cultural interest in Islamic finance. And so we've seen each part of the IDB group play a role in developing some element of the market or the sectors that require Islamic finance. And through that, we see effectively IDB Group is like the tip of the spear. As it enters into a market, it brings forward knowledge and opportunities within that market space. And so we've seen many countries go from zero Islamic finance to issuing a Sukuk through a government entity to eventually having windows in their banks and so on. And we have some great examples here in the audience. You know who you are. We have a delegation from Uzbekistan which has followed exactly that model. Then when we look at two other factors, we've seen a number of countries, Egypt is one, Kuwait is another, Malaysia was an early mover, adapting their legal frameworks to make it easier to have Islamic banking, to make it easier to have Islamic capital markets. And that allows, whether it's international participation from the capital markets, led by ICD in many cases, or domestic champions to support the growth of capital markets activities. So that's been really an exciting element within the market space. Where we have some trouble, and why maybe we have a limitation on capacity, on our growth, is capacity development is actually weak. And the two weaknesses on capacity development are the users, our customers don't know what the product is, and the providers. Many of the bankers are only just now, as we sit here, learning what the product is, how to offer it in a logical way and a beneficial way to their markets.
This is great. Essentially what you said, This is great. And essentially, what you said, I mean, you repeated what Engineer Hani Sombol said, His Excellency Engineer Hani Sombol said. It's a lot of it is about capacity building, training people. And what I also liked is the parallel you could say, IDB Group is like the spear, it's spearheading, and then after that Islamic finance can flourish. But I would like you to be just a wee bit more specific now with my second question to you, just quickly. We've seen some great examples presented by His Excellency the Governor of the Central Bank of Indonesia. Can you give us just a few products that you've seen undergo transition to really help grow this market space?
So I think one of the first elements that we've really seen is understanding how to use tawarat. I know it's controversial for many people, but it's often the easy adapter for many countries. It's the one that the central bank understands the best. What's interesting about the Central Bank of Indonesia is they banned it. And when they banned it, and Oman did this much earlier, one of the benefits was they forced their bankers to become more creative. And that caused a new adaptation of musharaka or mudaraba type products into the system, creating some different opportunities for the market. Now, you're going to see something within the next year. The controller of the currency in the United States, which administers national banks, is going to approve community banks in the United States to use revenue-based financing products. And that means that banks will be able to have mudaraba funding products in the US, whether or not they have an Islamic window. So we have 3 banks with Islamic windows. We have a 4th bank getting an Islamic license. And we've seen frequently that if something is done in the UK or the US, it often it has a positive rebound into the Arabian and emerging markets of Africa and Asia.
Well, that's really good, and I sort of like the again your analogy where you say, you know, the central bank, again the spearhead is the central bank. You need the central bank to kickstart this whole thing. And when you talk about central banks, I'm now going to the device owl in, if I may say so, in ICD, Mr. Iqbal Daredia, who is the advisor to His Excellency Mr. Ayman Sijini, the CEO of ICD. And as Mr. Thomas, I think, has pointed out extremely well, we do need a regulatory framework to cope with it. So what sort of frameworks, laws, regulations are necessary to be created so you can have a thriving ecosystem of Islamic finance? Mr. Iqbal, the floor is yours.
Thank you very much, Cornelia. In terms of the capital market products, specifically on the Sukuk side, if there are emerging markets who want to establish the necessary regulations, they have to take into consideration various factors. In terms of Sukuk structuring, what you have is a structure whereby you effectively sell the economic value of the asset to an SPV and then lease it back, thus deriving ijara out of it. Now, in certain jurisdictions, the tax authorities have viewed this as a buy and a sell contract, and what that entails is a potential rise to capital gains tax. Effectively, when you sell to the SPV, if an asset in your book is say 100 and then you sell it to the SPV at say 110, then you may have to pay capital gains on the 10. The other side of it also is that when you lease it back, there is rental payments to be made, and those rental payments will go to, say, some investors who are outside of the country, and that could give rise to a withholding tax as well. Now, what has happened in, of course, most of the jurisdictions which have established the Sukuk law in place have abolished this double taxation treaty. However, we see that in some countries it's still there, although they have reduced it, but they haven't abolished it. Like, for example, if you look at, say, Bangladesh now, recently they established, they still have that. So those are some of the kind of hurdles that need to be addressed when establishing the necessary law to have the capital market products. Thank you.
Thank you very much indeed. I can hear myself doubly. That's not a good idea. We all hope this is very important, and I'm glad you mentioned the tax angle. I've just paid my taxes in my home country. Oh dear. Mr. Dareda, we all hope that transactions are successful, and we all go into transactions to make them be successful. But sometimes things happen. It can be a pandemic, it can be a war, it can be mismanagement. So how do you look at Islamic finance products when the going gets tough? You know, what are the workout mechanisms, and how does one get oneself, out of a tricky situation? And again, what are the legal requirements that countries have to consider when they start establishing that Islamic finance ecosystem?
Islamic finance is very interesting in that we work like partners in this sort of situation. Effectively, if there is going to be a potential default, then we sit down with the issuer as a working group and try to have a workout situation. For example, you can either extend the tenor of the Sukuk, or you can give a period whereby they don't pay anything. However, if it's a case where you can't do any more than that, then what happens is under the Sukuk structure, effectively you have a trust, and then the trust would be abolished. And with it, when the trust is abolished, then you have the assets that are in the trust. They would be probably sold, and all the creditors would have entitlement to those assets under the pari passu effect. However, that's the last resort that Islamic finance will want to pursue, and if they have to pursue that, then they have to get at least 75% of the Sukuk holders' consent to agree on what kind of action that needs to be taken. So that's how, in the event that there is a default on the Sukuk side, the actions that you would take. Thank you.
Thank you. That's very interesting. And I was just thinking of one more thing here, which is when you have a traditional loan, if you need to unravel or undo the loan, there's always interest rate penalties. And I understand that in your case, that's actually not the case, because there's no interest rate, so you don't have that penalty.
Yes, you are right. I mean, in Islamic finance, you cannot charge sort of
Yeah.
effectively profit on profit, and that would tend to amount to interest. So yes, you are right.
Thank you. I think that's something to really consider, especially now that we've gone through a pandemic and that we have other geopolitical problems that will take their toll on the economy. Now, the next speaker is a very well-established lady. She's the general partner of the Grow in Africa Fund, Ms. Iman Wabi. And Ms. Wabi believes in impact investing, or does impact investing, and her fund is Africa-focused. So when you look at this space of impact investing, what are the latest trends that you can see, especially in developing countries and especially in Africa? And when you sort of develop that further, impact investing has also a lot to do with SMEs, who are the backbone of the economy, because that's really where the jobs are created. It's not the big companies, it's the small companies that create the jobs. So could you elaborate a little bit on that theme, please?
Speaking about Africa, I think we saw a record year for African startups in 2021. African startups managed to raise actually 5.2 billion, which is, if you combine the 7 previous years, it's actually more than that. And the good thing to see that there's a lot of interest in impact investing in Africa. It's on the rise. I'll come later maybe on a couple of the challenges that we face as impact investors. But if we look at the big 4 countries that raised actually capital, 90% of the African 90% of the capital raised in Africa was mainly dominated by 4 markets. So this was Nigeria, followed by South Africa, followed by Egypt and Kenya. If we look that, we also have very vibrant ecosystems. We have excellent entrepreneurs in West Africa, Senegal, Ivory Coast. So you see more companies, and Morocco is doing great when it comes to the ecosystem over there. One of the other trends that we see as well is that fintech actually is dominating the scene in Africa. So fintechs managed to raise almost 60% of the capital deployed in Africa, compared to 17% in MENA. This industry has been a very vibrant industry. 2 trends as well, I would say. I would speak on the international and the regional as well. So on the international, we saw Africa attracting a lot of investors like Sequoia, like SoftBank, and we hope actually to see more capital from for instance, from Malaysia, from Khazna in Malaysia. We hope to see more involvement from the GCC as well in Africa. So for a long time, we at the MDBs and the DFIs, we talked a lot about regional integration. So I'm happy to see that actually African entrepreneurs took the lead on this before the governments did, and now we see a lot of integration happening across markets. So you see an Egyptian company acquiring another one in Morocco, Move, which is actually born in Lagos, managed to expand into 6 markets and now moving into Dubai, London, and India. So this is on the major trends we've seen. I see 4 major challenges that could be actually turned into opportunities over here. So these 4 are women, small, green, and blue. So for women, we see that this record fundraising we've seen in 2021 was not really gender sensitive. For every $1 that a female founder would raise, $288 would be easily raised by a male founder. So we need more gender-lens investment strategy. I'm happy to see our colleague here from the IFC who's done a great job in MENA on this. this is a major challenge that we hope that this could be turned into an opportunity. The second one is small companies. For a company at the seed stage, it's very hard to borrow. That is not really what they look for. So it's equity, and it could take up for a year and a half for a founder to raise like between 500K and 2 million. So it's very challenging for companies early on to raise equity. I would say that we have a huge opportunity in Africa. Okay, I see that you put on your glasses. So just two quick things to note on the green economy and the blue economy. So there's a huge potential for Africa to leapfrog when it comes to, now we're speaking about the food issues, food security issues. So we have a great job to leapfrog to the green economy into green and clean energy transition. The beautiful city in Senegal, Saint Louis, is facing really serious issues when it comes to climate change. There's a lot of potential for young people and women there to work on innovative green and actually blue startups. And let me stop here.
Well, I think that's very inspirational, and I especially like the fact when you brought together how important fintech is. We saw that with mobile telephony, which also, just jumped in leaps and bounds on the African continent. I also found very interesting, what is the mission actually of the IDB, the South Cooperation, which is really important. And obviously, as a woman, I'm fully behind you. Empowering women and small and green and blue is great. So we are now going to the IFC. And you actually gave me the clue for the question to Mr. Walid, because we have the energy transition and the principles as they were established, especially in COP26, make make energy transition and investing in green energy a really big marketplace. There's many opportunities and not enough capital around. So from your perspective, Mr. Walid, when you look at green projects, I know you've thought very deeply about green Sukuks. Can you tell us how you think green Sukuks can help address this issue?
Thank you. First, Yes, thank you. First, let me talk about the huge investment opportunity on the green and climate investment. I mean, the study that IFC World Bank did recently show there is a need of $23 trillion investment in the green and climate in the next 7 years until 2023. This will be the largest single growth for financial institution in the emerging market. Now the portfolio, it's around 7%. We expected this to reach 30% by 2030. The need for Middle East, North Africa, it is 265. In Sub-Saharan Africa, 780 billion need. Sukuk, it is a mean of project finance. In the market, whereas the capital market is new, there is need of legal infrastructure. I mean, as a World Bank group, we work with countries to help put together the legal infrastructure for issuing the Sukuk. And also not this only, also the issuer, the investor, the bank need to work together to establish that capital market business. It is also for non-banks like asset management company, pension fund, they should also start and focus on Sukuk. This will allow them to have a better pricing, great size, longer tenor, and diversify of business. I mean, green bond, it's been long time in the market, but green Sukuk, it is just introduced to the market in the last 5 years. The difference between the green Sukuk and Islamic Sukuk, the green Sukuk should be funded environmental friendly project, which related to green building, solar, wind, electronic car, green transport. We have a long experience on Sukuk issuing. I mean, in 2004 we issued first green Sukuk in Malaysia. In 2009 we issued Sukuk between Dubai and Bahrain. This year we issued the first bond, green bond in Egypt with CIB, $100 million.
That is great, and I'm going to ask you the same question as I'm going to go back to Ms. Eman as well. Where do you see for the IFC? How do you see the Islamic finance portfolio growing, and how do you see it growing with other IFIs? You know, there's the World Bank Group, there's the African Development Bank, Asian Development Bank. Do you see it also gather momentum in those institutions?
Yes, sure. I mean, this will be opportunity for IFIs, especially the demand for Islamic, as mentioned by several of my colleagues. But I can give you an example about especially the green Sukuk, green bonds investment. I mean, in the World Bank Group, we put a target of 35% of all investment that should be on green and climate. In the last 5 years, we managed to invest $150 billion US, 80 billion from our own account, and we mobilized 70 million. The need of Islamic financing, it is in Middle East, especially in GCC. I mean, if you establish as IFC company like leasing, we've been putting a new leasing company in different country in the region, and this is also leasing about itself. It is Islamic, and now most of them we give them green loans that will help moving to next step to be Sukuk. Also in the Saudi market and UAE market, there is a lot of Sukuk has been issued recently, and it's oversubscribed.
Yeah, that's very true, and forgive me for sort of being maybe a little bit controversial. The IDB is leading in this, the other IFIs are following. So a clear leadership role for the IDB. Well done. And the same question actually in a different format to you, Ms. Eman. You know, when you look at impact investing, I look at ESG, it's actually quite compatible with Islamic finance. So, you know, they're very compatible principles. When you look at impact investing, what is the role of Islamic finance in that, and how do you see it grow?
Well, I think both the Islamic finance and impact investing, they can play a huge role in as a great enablers and for the implementation of the SDGs. I would highly recommend that different MDBs and DFIs actually would support and provide kind of a technical assistance to the to SMEs when it comes to impact finance, because young entrepreneurs sometimes very much focused on their business. They really need to know more about measuring and managing impact, so this knowledge is very important, and hereby I would say it would be great to have the ISDB setting up a kind of a knowledge forum like TICA, if I recall, something that would help VCs in member countries and entrepreneurs in member countries to exchange knowledge, networks and partnerships, because access to finance is not the only problem facing entrepreneurs.
Yeah, as Mr. Sumbul pointed out so many times, it is also the knowledge. Now, we have the best experts that you can find in the world here, and we would be remiss if we didn't let the audience ask their questions. We have for about 2 or 3 questions. Might I ask you to ask your questions precisely? Short questions. We don't want comments, we want questions, so the experts can answer and tell us who you would like to answer. So do I see a hand here? Anybody wanting to ask a question? Yes, madam. Can you please bring the microphone to the lady in blue? Could you identify yourself and your organization, please?
I apologize. My name is Fatima. I come from Senegal. My question, what is the minimum and the maximum for Sukuk by states? The minimum dollar and the maximum dollar, what the states can bring for the Sukuk?
I guess that goes to Mr. Daredia and maybe also to Mr. Thomas. You need to...
Are you talking about the issuance amount, madam? Are you talking about the issuance amount? How much to issue, minimum and maximum? Okay. So you have to look at Sukuk in a way that it's a fixed income instrument. When you want to issue a fixed income instrument, you not only take care of the primary market, but you also have to ensure that the secondary market is also vibrant. Now, and your paper is going to be traded in the secondary market. So, in order to have that effect, the minimum size that you would want is a benchmark issuance, as we call it in the capital markets. That benchmark issuance can be from $350 million upwards. Ideally, if you reach about $500 million, then the issuance will qualify for trading activities in the JP Morgan the emerging market index as well. So it helps your secondary market trading. But effectively, you are looking at a minimum size of about $350 million so that you attract the big investors as well, like the BlackRocks and the PIMCOs of this world. Now, there is another way if you want to issue a smaller amount. In that case, then what we have to do is what we put in an MTN program under the program of, say, whatever it is, $500 billion, $2 billion for a certain period of time, and you know that you are going to come repeatedly to the market, and therefore under that program we can issue smaller sizes. Let me give you an example. Last year, the Maldives government came to us at a time when tourism was totally at a standstill because of the pandemic, and they wanted funding requirements. And so what we did was that we put in a program for them for $1 billion, and under the program, the first issuance that we did was $200 million. Effectively, they had a Eurobond in the market, which was yielding to maturity 21%. What we did was we did a tender offer on that. We took out the $200 million of the conventional bonds, issued a Sukuk at 10%. So effectively, they got a good deal out of that. Then they said they want another 100, and then another 200. So all in all, we did $500 million for them, and this was under the program that we did. But that one was an exceptional case in the sense that Maldives was the Minister of Finance was able to sell the story to the market, and that's how you can do a smaller amount.
Fantastic. That's really great, and I like this incremental and building on the increments. I also like the idea of attracting the big boys, of this world, the Larry Finks of this world, the BlackRocks of this world. Mr. Abdul Qadir, I'm sure you have some comments to this, and I would also be interested in your view on is it really what's the appetite for the BlackRocks, the Larry Finks of this world for Islamic finance products?
So I'd like to start just with the small size Sukuk. When we had the slides from the governor of the Central Bank of Indonesia, all of those social and Waqf-linked transactions are micro Sukuk.
Yeah.
Those are transactions which are designed for social impact and are issued for less than $1 million, sometimes even less than $500,000. Singapore was the first country where these types of Sukuk were done early in the 2000s. So there are some really good role models for Senegal and other countries in these Indonesian transactions, and I think if you can tackle the governor and his colleagues, they've got a really great role model, and it's publicized. BlackRock. I don't know about BlackRock, but what I do know is that there's increasing, the benchmark Sukuk that Iqbal described are increasingly filtering through portfolios across the world of all large asset managers, because sometimes these are the best way to access risk from emerging markets, from certain emerging markets. So they may not be able to get a bond from a certain country, but they can buy the Sukuk from that country. So we are seeing Sukuk filter as an accepted fixed income instrument globally in the big asset manager portfolios.
That is good. So we have a growing, big, brave new world ahead of us.
We do.
That is great. So is there another question somewhere? I think we can take one more question. Yes, the gentleman there who is very patiently holding his hand. Oh, the gentleman in the third row. Left to your left, sir.
My name is Muhammad Usman. I'm the Director of Agricultural Investment Department in Arab Authority for Agricultural Investment and Development. My question, nowadays we are facing challenges regarding the tremendous increase in prices of agricultural crops. And I think in the Arab and Islamic world we are facing this issue and we need to address it. Is there any, or what is the probability of the success of attracting finance to agricultural sector using the instrument of Sukuk? Thank you.
I think that would go probably to the two gentlemen again, and then maybe Mr. Walid has a final remark on this. So let's this time start with Mr. Abdul Kader, and then go to Mr. Iqbal, and then Mr. Walid.
One of the important concerns for the agricultural sector is scale, and the second concern is where's the output going to go? And for that, my gut feeling is in many of our member countries in Africa and Asia, we need to have domestic Sukuk markets for that to be impactful. We will not find it easy to bring overseas investors into that area. This is actually where IFC or ISDB group come to play, and I think you can find some really interesting ideas out of both ICD and ITFC in terms of domestic market development.
But that's very interesting. So horses for courses, essentially, to put it bluntly. Mr. Iqbal, what is your comment on this?
So from our side, ICD side, that's something that we shy away from. It's very difficult for us to provide financing into a third country and then try to manage the exposure over there, unless we see very strong sponsors behind it, and then we know exactly the use of the funds and how we are going to be paid back. Then only we will consider through a Sukuk structure. Otherwise, as ICD, we tend to shy away from.
That's very interesting, because when I started out in my investment banking career at Citibank, I was told that you can do oil, you can do anything, but don't do anything that's perishable. So which makes sense. Mr. Walid, what is your comment on this?
I mean, for issuing Sukuk, it takes time. I mean, especially in our region, especially if we don't have the legal infrastructure right. And this bond usually issues 5 years or Sukuk for longer. And the need that you mentioned, it is maybe to cook for short term, 1 to 3 years. This could be other opportunity to take an Islamic loan for this.
That is very, very good. And I think before I wrap it, I'm going to wrap it in a second, and then we've made even good on some time. But I would like to have, starting with Mr. Iqbal, each of you gets one sentence to tell us what you've learned in this panel. Mr. Iqbal, you're the first with one sentence.
Can you repeat again?
Yes. What have you learned? One sentence only. What was new? What have you learned in this panel?
Listening.
Very good. Ms. Iman?
I think it's knowledge sharing.
Knowledge sharing, excellent. Mr. Walid?
Also, what we hear from the speakers, the need for Islamic financing and the growth expected for Islamic finance.
And Mr. Abdul Qadir?
I'm really excited about the opportunity for Islamic finance to hook up with the impact sector.
Oh, this is great. I mean, this is, and I'm now going into a very short summation, because what I've heard here is that this is a sector really growing, and it has a future in various places. Especially, let's look at social impact investing, because it is close. It's very close. You look at green Sukuks. I mean, where you have ESG and Islamic finance, they just marry very well. We see that there was, when we look at impact investing, there was a lot happened in Africa this year, and there is more room for especially Islamic finance. So, in other words, also the green Sukuks are very important. When you look at the Sukuk market, green Sukuks, there's a lot of need for money, and it's a new structure of tapping in money. And what we've also learned, which I thought was very important, being very careful when establishing the regulatory and legal system, so things don't unravel after you've started them. And with that, may I thank this distinguished panel, and would you please all give these distinguished speakers a big, big hand. So I think we now have a networking coffee break, but the master of ceremony, our boss, is here.